Gold prices see weekly losses as Fed rate risks rise. Gold prices fell barely on Friday, and have been set to cease the week decrease as hawkish alerts from the U.S. Federal Reserve on the root of U.S. hobby charges drove up the dollar. Spot gold fell 0.1% to $1,756.59 an oz, by means of 23:03 Eastern Time, 3:03 Greenwich Mean Time, even as gold futures dipped through a comparable amount to $1,769.70. Both gadgets have been set to lose about 2.6% this week, having fallen for all 5 sessions. The dollar index was boosted by comments from Federal Reserve officers that the financial institution could stick with a sharp tempo of charge hikes this year to deliver down runaway inflation. St. Louis Fed President James Bullard on Thursday mentioned he presently supports a third consecutive 75 foundation point (BPS) rate hike in September. San Francisco Fed President Mary Daly also flagged a potential 50 to 75 bps per second hike at some stage in the Fed and RS&Qo's subsequent assembly, with a target of retaining charges above 3% via the year-end. Their comments came after the minutes of the Fed and RS&Qo's July assembly confirmed on Wednesday that most members of the primary financial institution supported raising rates notably to fight inflation. This positioned the greenback on course to benefit for the week, pressuring most metallic fees. Rising hobby rates this 12 months have visible the dollar in large part overtake gold as a desired secure haven, sapping the yellow metal of its profits made throughout the onset of the Russia-Ukraine crisis. Platinum futures fell 0.1% on Friday, while silver shed 0.8%. Among business metals, copper futures fell slightly on Friday, and have been set to lose over 1% this week after susceptible industrial manufacturing information from China. China is the ARENA and RS&Qo's largest importer of the red metallic, and is currently struggling to shore up manufacturing unit pastime after a series of COVID-19 lockdowns. Trouble within the United States of America and RS&Qo's big actual property market also spells greater headwinds for the financial system, which is in all likelihood to weigh on the fees of copper and other industrial metals in the medium time period.